right, we are live from the Goose Studio.
Happy New Year.
Happy New Year, everybody. Merry Christmas. Feliz Navidad. Nicole, what'd you do for Christmas?
I did nothing for Christmas. I cooked a turkey and no sides. That's what I did.
Turkey with no side. John, how about you?
Oh, family, friends, traded stocks, all the my life never changes. Same day to day.
Buying the dip even at Christmas. I love it. Oh, that's great. Okay. I've been looking for something fun for our camp. Check this out. Ta-da! It is called Splatterball. So my kids got it for me for Christmas. Nickel cadmium battery pack. It shoots single rounds, 200 feet per second, full auto. Get this. That is 20,000 rounds of ammo. You stick it in a water bottle, rehydrates in like 4 hours. And just to test it, I let them shoot me in the ass once. Oh my God. You don't want to get hit. So we now have a new game for camp. Everybody gets Splatterball, environmentally friendly, and we can actually play capture the flag. So, ta-da! That was my Christmas. Let's do some stock market-y stuff. Okay, so I used to play the stock market. I used to play futures. I did a little, I don't do it anymore. I would just as soon go to Vegas and throw money on the craps table. But for those of you that still believe in Santa Claus, John's really, really good at it. It's long term. It's the same with everything, right? If you have the right perspective and have the right psychic frame of mind, you can kill. And you have to do something to protect your wealth in the long term. Just wasn't good for me. With that,
well, you were not investing though, right? You were speculating. You were doing futures contracts, whatever. I can't do that. I'm not a day trader. I've been trading since 1985, and I have lost hundreds of thousands of dollars multiple times, right? Over 36 years. But guess what? I've made millions and millions of dollars on top of that. So I came out ahead. It's not, I just put up a podcast episode today about not looking at the daily balance. I mean, one of the biggest mistakes people make is they look, oh, I'm down $10,000, $1,000, $100,000. So what? If you're the example I used in the podcast was I said, if your neighborhood, for whatever reason, your neighbor goes into foreclosure on their house and the bank forecloses on their house and somebody else gets a divorce and they have to sell their house and all these houses around you are up for sale and the market value is low. Are you going to put your house on the market and sell it? Well, why would you do that? You're going to live there for 3 years, 5 years, 10, 20 years. You don't care about the value of the house today. And the only reason your real estate doesn't fluctuate crazy day to day is because it's so hard to unload it. Stocks, cryptocurrency, whatever, they trade, some of them on a 24-hour cycle. And who knows why people are selling it? It doesn't matter. It depends on where you see the value and what your time horizon is. And I don't know of a better, easier way than to make money than to be in the stock market, right? 'Cause I'm not a hard worker. I'm not.
Okay. Would you say
I'm not one of those guys? So that's how I got into stocks to begin with, because I looked at it and said, this is over the long term. I can save my money and put it to work, and it works for me when I'm sleeping. And I've made far more money in the stock market than I ever did working as an employee.
Would you say, since you said it really doesn't matter why it's moving, that you're more a technical trader that trades on the graph versus the underlying reality of the business?
No, I'm a mixture, right? I'm AC/DC, not AC/DC. That's the wrong one. I'm OCD or
just on the like electric cars are going to be the thing, right? So really, it's the battery factories that are the thing, but really the thing is the metal. So how far back do you Or some people just trade technically on the charts and they don't give a
Right.
shit that it's space widgets.
So I'm not orthodox in anything, right? I mean, I'm very cynical, and I can see two sides of every coin, right? So, and that's a blessing and a curse. But the good side of that is that I don't get bogged down in any one thing. I know people that are technical traders only, and they focus on Fibonacci numbers or whatever, right? Regression to the means and all this. That's great. It works most of the time. Some of the time, doesn't work all the time. And same thing with fundamentals. I can make a case why you should buy Select Quote right now, which is a stock I've owned over a year, and I think it's down 50%, right? Fundamentally, I think it's great. It's not performing well. So I don't get stuck on any one thing. I started fundamentals. I personally don't invest in anything that I don't think is fundamentally sound. I come up with some kind of a net present value, and I look at that and compare it where it's at with the stock price. So that's where I start. Frankly, that's why I've never directly invested in cryptocurrencies or Bitcoin, because I can't put a net present value on them, right? Doesn't mean that Bitcoin isn't worth $47,000 today, because it is. It's just that, I don't know. It could be worth $1 million. It could be worth $5 million. I just can't come up with that. If I look at Apple stock, I can figure out, because of cash flow and history and profit expectations and things they have in the pipeline, maybe how much money they're going to be making in 5 years, and I can backtrack that and come up with a value. I can't do that with other speculative things. So I start out fundamentally, and I look at where the price is, if there's a deviation, and then I do jump into the technicals, and I totally trade. I'm always putting up charts. I prefer to follow simple moving averages because I'm a simple person. But I think if you just look at simple moving averages and horizontal support lines, resistance and support lines, everything else is fundamentally based on that from a technical standpoint. And I tweak things for my own purposes, but I mean, simple moving averages will tell you pretty much everything you need to know. So I mix those three together and sometimes flip a coin and make the trade.
I think we need to call this episode like everything is like investing in the stock market. We might need to rename it, because as John's talking, I'm thinking about what I do for marketing to get marketing numbers to move up and to make decisions. And the charts are pretty much the same, and it's a numerical game.
Absolutely. And that's with my whole podcast. It's evolved to the point now where it's mostly about stock trading, because that's what everybody asks me about.
Yeah.
But I mean, I call it wealth steading because it's like homesteading. It's just, it's farming your assets as opposed to farming the land. And it's a holistic lifestyle to build and preserve wealth. Right? I mean, it's a lifestyle. It's Dr. Ken Berry, our friend, he doesn't talk about the proper human diet, right? I mean, it's more about the proper human food. It's not a diet, it's a lifestyle. He's not telling you go eat this for 30 days or 60 days. He's telling you to change your lifestyle and eat that way. And it's the same way with building wealth, whether you're an employee, whether you're an entrepreneur, whether you're an investor. And investing, again, it doesn't matter if it's crypto or the Dow Jones Industrial Average or what it is, there are principles that apply. And we talked earlier before it came online about buy the dip. That's like my favorite phrase for a long time, because that's essentially how I've made all my money. Is I've never made huge gains on the way up in the .com bubble or in the housing bubble or any of that stuff. I was always conservative, but when things fell apart and everybody else was wet into bed, I was like, this is the time to buy. I
have so many questions for 22.
Sure.
Will you do your 2021? Why don't you start at January 11 months ago? Where the hell were we? What happened? Let's get people up to date on what had just happened. So we
and I was looking
to talk about what is.
I'm not very good live. I'm not very good live, which is why I don't ever do this. I'm looking for my crystal ball that Tactical Redneck bought me, and I can't find it.
Where'd it go?
I got my prop right here. I knew I had it somewhere.
Yeah. I think if
he does have a crystal ball.
Yes.
Right. I got a crystal ball. Oh, I see my face in my crystal ball, which is, you know what? That's the key to my future and my wealth is me. It's not the stock market. It's not cryptocurrency. It's not anything outside of you. And when we look at going into 2021 or 2022 or whenever, it's all about you and where you're at in your life and how you're going to make things happen, because you're ultimately investing in yourself. But yeah, let's step back a year ago, and a little more than a year ago, people were worried about the election, right? Oh my goodness, Trump's going to lose. Oh my goodness, Trump's going to win, whatever. Biden gets elected. Did he steal the election? The people storm the Congress. Who cares, right? None of that matters in your personal life for the most part. And all the things that Biden has or hasn't done, and a lot of things he did in his first 100 days where, he put a moratorium or the delay on the pipeline, the Keystone Pipeline, and signed the Paris Climate Accord, all these things, right? People were saying, oh, we're going green. We're going to go electric vehicles, fossil fuels, oil companies, they're going to crash. All these people are divesting and they're all investing in green things and no one's investing in oil. Best performing stock, or one of the best, not the best, one of the best performing stocks and sectors in the last 12 months has been, the oil sector. ExxonMobil was up, 80% or something. People last year were freaking out thinking that wasn't going to be the case. People were worried about the deficit. Oh my goodness, we printed more money in the last year than we have in the first 100 years of the country. And so what? US dollar is 5% stronger today than it was a year ago. It's one of the best, if not the best, strongest fiat dollars in the world. Despite all the deficits, it doesn't matter. A lot of the things people are worried about are insignificant. And so last year at this time, I was piling in to the reopening trade. I called it my COVID-90 portfolio. I bought it in October, at the middle of October. I want to get in ahead of the election. And that thing was starting to take off about this time last year and performed extremely well through March, and then got ahead of itself, pulled back. And again, I'm a long-term investor. I don't try and day-to-day try and sell exactly at the top and buy exactly at the bottom, because I can't predict the future. I held on to my positions because I still believed in the reopening trade. And Delta came in over the summer, and just as things were recovering again, we got hit with Delta, and that threw things into a tailspin. And then we hit supply chain issues and inflation and all these other things. And but then everything came roaring back at the beginning of November, and I thought we're going to have a perfect Santa Claus rally. And then Omicron hit the beginning of December. And bottom line, though, that the Dow Jones Industrial Average today put in a record high. I don't think the S&P put in a record high today. I think it put in a record high 2 days ago. NASDAQ near record highs. The reopening trade is down, and the small cap Russell 2000, which is kind of similar to that kind of reopening trade and value trade, that's down as well, as is Bitcoin. It's phenomenal over the last year how much Bitcoin has tracked the Russell 2000. If you put those two together, they're different in magnitude, obviously, because Bitcoin's gone up and down more. But if you just look at the direction of the trends, they lead and lag each other nearly perfectly. Bitcoin's down, and I don't own any, but shoot, it's still up from last year, right? My reopening trade are down from where they were in November, but they're up, 47, 45% from where they were in October. So day to day, I don't care about these things. I'm looking for sound value. I'm looking for what's going to grow and appreciate, which again is why I'm so optimistic. I'm always smiling. I make a lot of people mad because they think I don't take things seriously. But we live in the best time in the history of humanity. There's never been a better time to be alive from a quality of life standpoint. And a lot of that's reflected in the stock market because those companies that give us great quality of life keep making money.
Okay. Now we're getting to some long-term stuff. So it's the best time to be alive because the cost of almost everything is approaching zero.
Yep. On a relative basis, and that's why inflation, and everybody's worried about hyperinflation the last couple months, and I bonds are paying 7%. Who cares? I don't see that continuing. Demographics, we have a declining global population, especially in the developed world. Less people means less stuff, which means deflation.
Yes.
Aging population, which again is a global phenomenon, that's deflationary. As you get old, you spend less other than on healthcare, and eventually you die, and that's total deflation, right, when you're dead.
Okay, now what about this?
And then technology. I want to throw in technology. That's the other thing that just has brought the price of everything down.
Spiraling down. Okay, so in the last 2 years, with the new flu wiping out the oldest, most fragile people first, think of the lag time to clear escrow. A whole generation is getting wiped out. Those assets are changing hands. When I see people get money that aren't used to having money, it goes very poorly.
Yep.
So,
which is one of the key reasons where I think the Federal Reserve, everybody's saying the Federal Reserve is behind the curve. They should have raised interest rates, blah, blah, blah. Obviously, the Federal Reserve impacts all that. And I did a podcast episode a couple sessions ago. I said that one of the key reasons for inflation that I don't hear anybody talking about is the generational transfer of wealth. 800,000 Americans have died in the last 20 months, most of them with some kind of assets, some of them with a lot of assets, and they've left that to their children and grandchildren. And
whenever spending it without any,
they're out spending it. Absolutely. Whenever you inherit money, you buy a new house, you buy a second home, you fund your retirement, you pay down your credit card debt, right? I mean, it's like winning the lottery. You do all those things with that money. And to me, that has been a bigger driver of the current inflation we're in than anything the Fed does. Because think about the Federal Reserve. They have a mandate about keeping prices stable and low unemployment, all that thing. But the bottom line, the only reason the Federal Reserve has ever been created, we talk about being the lender of last resort and supporting the banking system. That's all true, but why are they really? What's their charter? To loan money to the government. They're the lender of last resort to the government. If any country that hasn't had a central bank has never been able to finance its war. So the biggest thing the Federal Reserve does is finance the government. And to that extent, they create a lot of inflation. And, that's what happened over the last 2 years with the huge deficits we've had in the federal government. But that gravy train's coming to an end too. We've spent $5-6 trillion in the last 20 months from the federal government. We're not spending that 12 months from now, unless there's another major crisis. They've scaled way back. They're going to go back to they're only going to run $1 trillion deficits instead of $3 trillion deficits. So that's not the thing. But that inheritance, transfer of wealth has been a huge factor.
So do you think with the demographic shift, are the kids that are getting these stock portfolios, what are they going to liquidate them? Do they want to own stocks? Do they just leave it where it's at? Like, how's that going to impact the market next year? Because that's a lot of decision making with a lot of asset power.
Yeah, I don't know about next year, right? I mean, we've already seen a big pullback in the meme stocks, the stay-at-home stocks, everybody that was jumping on the latest vaccine stock that was coming out and driving the price of Moderna up, and Peloton exercise bikes and DocuSign and Zoom and GameStop and all the movie theater stocks. A lot of those are down 50 to 80%. So we've already seen a lot of that come out. I do think, and as I anticipate, as happy as I am and as a long-term investor as I am, I always try and get out before the train wreck, right? Which again is a way I've built my wealth over the long run, because I can't predict it exactly. And I've never made as much money on the way up because I have generally gotten out before the top. So I get out, but it keeps going up. So I am anticipating, and I don't think it's 2022, but sometime in the future, we will have that big .com bubble blow up, right? Because the millennials have not lived through that, right? The boomers, the Gen Xers, many of them are scarred. There is literally not a week that goes by that I don't hear from someone that they tell me they're afraid of the stock market and they haven't invested in a long time. And I say, how long? And they say since 2008. I mean, literally, I hear that every week at least once.
Wow.
So, I mean, there are Gen Xers and millennials or baby boomers that are so scarred from the 2008 and then a few years later, the .com bubble, and then a few years later hitting the housing bubble in 2008, that they're just concerned. The millennials haven't experienced that, right? They've bought into Bitcoin and it's gone from 0 to 69,000 or something at one point, right? And they bought, even GameStop, which I think is crazy fundamentally. It's still, I don't know where it is today, $150 or something. It's $150 more than I think it should be. So the millennials haven't experienced that, and they will. It's a once in a lifetime or twice in a lifetime thing that there's always a huge correction. And Brian, your grandparents probably always relived the Depression, right?
Yep.
My grandpa, they always talked about the Depression. My generation talks about the .com bubble and the housing crisis. The millennials will get that, and it will, you'll see a 50 to 80% collapse in prices depending upon how risky things are. And you know what? It will be the best buying opportunity in the next 30 years. Hopefully we can get out of it before that comes. But I don't know if that's coming. I don't think that's coming next year. There's too many good things in the system.
Keeping the powder dry. Okay. Now check this out. I followed drone technology of moving humans around a lot. They're using them in Dubai right now. UPS just signed a contract for 150 of them at somewhere around $500,000 a piece. Uber has already paid the city and county of LA for the 2028 Olympics $1 billion for the rights to deliver human beings by drone to the games to box out lift. So there's actually drone taxis that you can start to invest in now. They're about $500,000 that will be able to run taxi routes. All of the top 10 companies are all talking about, but not saying anything publicly as a release, but 2024 is in all of their materials of when it's going live. So if for 100-mile trips around a metro, I can spend $200,000, which sounds crazy now, but really it's just a really nice Mercedes. And in Seattle, there's fucking 1,000 of them out there right now on I-5. Well, not today, but 1,000 of them. If me and my buddy can throw our IRAs and buy a drone taxi and put the fucking thing to work, flying people from Microsoft to the heliport or to the airport so they don't have to sit in the hour traffic, and that asset can work for me all day long. Road crews? Why do you need road crews? New intersections? Stoplights? Wiring? All the crap. Think of all the crap for surface level car travel that just goes away. The battery technology at the nano level to build actual batteries, one molecule at a time. They've got one on a Beamer now that's like 60% less weight. It supercharges. You can recharge the whole pack in a minute and a half. So if you have a drone that can charge itself in the minute it takes to get the bodies in and out of the thing, you've just changed everything. Think of
right. And what you just described is technology, right? Whether it's, the railroads of 150 years ago or the internet of 30 years ago.
So what do you think about my play?
I'm totally on board with a couple caveats, right? I'm still waiting on flying cars since like 1967, right? I think when I was a little kid, I saw the Jetsons, right? They talked. I had a popular mechanics magazine with a flying car on the cover, and it was just around the corner.
Bought the contract. They spent $1.5 billion. Money is laid out on the line. UPS is not like shim down the street.
Right. It will happen, again, as electric vehicles. I mean, all these things are happening. And it gets back to why I said we live in the most amazing time in human history. And drones will definitely be a way of the future. Again, I'm glad you mentioned buying a drone and starting a business as opposed to buying into a stock that does that, because I do think that makes a whole lot more sense in terms of you're taking control of a new technology. You're an early adopter, and you're doing it right. So I think you would have a much better way of making money off of that than if we look at the 50 drone companies right now. Which one do you invest in? Who knows?
Well, you can't leave money in the bank at the amount they're printing, and the launch of how fast everything's accelerating. If you're not making 20% a year, you're not going to be going forward at all anymore. Right. And that's what I'm trying to people.
And that's the key is you have to invest in things wisely, right? In your own small business, in your career, in your education. You always got to be moving forward. You have to be investing in the stock market because you're investing in growing companies. And I mean, one reason I broadly love the stock market and the S&P 500 is that they're always weeding out the losers, right? I mean, the S&P 500 today isn't the same S&P 500 10 years ago, 20 years ago, 50 years ago. They weed out the losers, and the winners get bigger and bigger until they fail. And there isn't an S&P 500 company today that's doing drones, and I don't know which one will be the main big one, but at some point there will be, right? And that's why you want to invest in that stuff.
Invest in the blade manufacturer, not the car company. Like,
I love the derivatives, right? Oh. As part of my reopening stocks, I didn't invest directly in like cruise lines or airlines.
Okay.
Like lots of employees, lots of capital, lots of government regulation. I mean, think about Delta Airlines, great airline, and it has worked out well for it. But I didn't want to invest in Delta Airlines back a year or so ago because they got all these pilots they got to keep retraining, and aircraft they got to maintain, and government regulations and all this stuff. But if you look at the derivatives of the airline industry, where there's a number of small manufacturing companies that make parts or something for the aircraft industry, their stocks collapsed as much or worse than Delta Airlines did. Those are the places I invested. I went to that derivative as opposed to the specific thing. And again, even with drones, you're talking battery technology, right? So, I mean, which way do you go on that supply chain? Do you go buy lithium miners, or do you buy some other electronic company that makes all that happen? And the answer is they're all there, right? Buy them. That's where the future is.
And I wrote down earlier when you were talking about the energy companies not being oil companies anymore, right? They're really energy companies. And if you look at the amount of loss in transmission, right, that's where you lose like half of the electricity we produce is getting it to the place it's used. If you decentralize by making all the houses have Tesla battery packs or whatever, lithium stuff that will hold enough. Ford's commercial the other day was your big pickup truck is your house's backup, is the whatever. It's a decentralized grid, which makes everything work better, but that all works together. You don't have to make as much energy if you don't lose half of it in transmission. And then again, there goes all your giant plants. Don't need big nuke plants. Don't need big coal plants. So all the guys working in that shit right now have to start like thinking they don't need you soon. Yep. It's coming.
Yeah, 30 years ago, you could have made a good living working for the Yellow Pages, right? Whether you were a Yellow Page salesman that sold the ads, or you were worked as
somebody still is now.
Yeah, they still do those things.
Yeah.
So industries are always shifting, and I'm still really big on oil companies. I own Exxon, I own Chevron, I own Devon Energy, I own the XLE ETF, and some people criticize me. They'll say, "Well, nuclear energy is going to put an end to all that." I'm like, so it doesn't mean I don't like uranium. I'm just saying ExxonMobil's not going out of business tomorrow. I mean, they may be gone in 10 years, but they're not going. And I could be dead in 10 years. I'm looking to the future, but I'm investing today, right? I'm looking for, again, I'm not saying day trading, but I'm looking at the reality of today and the potential of the future. And, again, I'm still waiting on flying cars. If I'd have invested in flying cars in 1967, I'd have never made any money.
It doesn't seem out of scope that an oil and gas company wouldn't figure out that they are an energy company and iterate anyway.
Right. Absolutely.
That's what we're talking about. Like, okay, this is the oil and gas thing, but
half of that.
And when you go plug in your Tesla to fill it up at some charging station, it's a lot of the gas stations don't make money selling the gas anyways. It's the potato chips and Coke and Slim Jims and stuff they're selling inside. Cigarettes and lottery tickets keep, that's a bigger money maker for, I think, for a lot of these gas stations anyway. So it's a broad, phenomenal economy, and it's also extremely unpredictable. I wrote a book a number of years ago about the robots are coming and about technology.
Yes.
And I made a point in there, and the last chapter or the last section of that book is called "Think Like an Investor, Not a Speculator." And I mentioned that, we are going to see these amazing things come online, but if you put all your money in a few of those technologies and they don't pan out, you'll lose everything. Just like the .com bubble. And there's no doubt that the internet was a thing in 1995 and 1996, but a lot of those companies then don't exist now, and some of the ones that are the biggest now didn't exist then. I mean, right? They just weren't even around. You couldn't have invested in Google in 1996. Google this past year was up 60%. You think about how big Google is, and yet they were up 60% this year. It's amazing. But one of the points I made in that book about not being a speculator. And we know drones are going to be a big thing again, but what company, right, or what technology? If you go back,
all of them.
Well, that's just it. That's why diversification. The two things I love are buy the dip and diversify. And the big point I want to make on diversification is if you go back, I forget what year it was, 15 years ago, Rupert Murdoch, who's a media mogul and no dummy, right? He's no idiot, has billions more than I'll ever have. And he has a staff of people that are 8 times smarter than I'll ever be. When he was getting into social media, because he knew it was the next big thing, he bought MySpace. What an idiot! Why did he buy Facebook? Well, back when he bought it, MySpace looked like a pretty good bet.
I remember when they were big.
Yeah, and again, if Rupert Murdoch can make that mistake, I guarantee you that John Pugliano can make it. So broadly diversify. You don't put all your don't put all your duck eggs in one basket.
And I think you have to be comfortable knowing you're going to throw at 100 and 90 of them are going to blow up. It's going to go away. Don't cry over that, because the 1 or 10 that are going to hit are going to 100x your 10. But in
1996, in 1996, if you put a fraction of your portfolio into Microsoft, or into Apple, right?
Every tech stock, if you had allocated,
just a fraction,
tiny.
Right, all those other ones, Tandem Computer goes out of business. IBM is still around, but they're a dog. Cisco's done well lately, but it's taken them 20 years to get back to where they were. But again, if you'd have invested in Microsoft and Apple, we'd have made up for all those other ones. And not right away. I mean, there was a time, remember, Steve Jobs didn't make any money from Apple because he sold all of his stuff when he got fired in the early days. Remember, all of Jobs' money came from Pixar. When he got fired from Apple or left Apple and went to Pixar, and that's where all his money really came from. There was a time when people thought it was going to go out of business. Microsoft spent, 15 years, 10 years, hugely underperforming. They've been kicking butt the last 5 or 6 years. And this year, again, Microsoft, as old and big of a company as it is, it was up, 35, 40% this year. Phenomenal performance.
Oh, let's see. Someone's asking about small cap oil companies.
Well, wait, let's go back to that real estate question because we got a backlog of questions here. You okay with that? So we got James Richter who said, John, do you feel carefully selected rental property is a good investment?
Absolutely, assuming that you know anything about real estate, right? It's real. One of the biggest ways that people become millionaires, first generation millionaires in this country throughout history, they become millionaires through real estate investments or creating a small business. Those are the two main reasons people become millionaires, first generation. So absolutely, I mean, real estate is great. Rental properties is fantastic. And even whether you buy into it as a REIT or whether you do it yourself or hire a management company to do it for you. But again, it's all about the market. Real estate's location, location, location. You own real estate in East St. Louis, I don't know, maybe not so good, right? You own real estate in Nashville, you're doing pretty darn good right now. So, but absolutely know the market, know what you're getting into, understand your risks. And I used to know a barber, old Italian barber. He's that guy, I'm going to make you look like a Frank Sinatra. He's one of those guys, you cut your hair. If you looked at him, you wouldn't think he had a dime, but he owned about 35 rental properties that he started buying. You know, when he was young, he was an old man and he was a multi-millionaire. He just cut hair because he wanted to go in the barber shop every day anyways. But he made all that money from those little starter homes. You buy them, you fix them up, you rent them, you flip them. And that was his retirement money. He had that annuity every month coming in from 30 some rental properties. So absolutely. And again, the best time of history where we live right now is like things like Airbnb. I mean, I live in Utah and real estate prices here are insane. And one of the reasons is because, you know, there's whether it's national parks or ski resorts or whatever, there's just all these places that people want to come visit for vacations. And Airbnb has made, although, you know, you don't have to go stay at Hilton or Marriott or something anymore. There's an Airbnb down the corner. And so that's raised the price of all real estate because you not only, you know, your second home, you can rent out all the time when you're never there. So it's not only an asset that is appreciating, it's also positive cash flow. And Airbnb is, I don't do those things because I'm too lazy and I don't want to deal with tenants and I hate that stuff. But I mean, for people that want to do it, absolutely, you can make a fortune.
And there are places right now where you can buy a house for under 40 and rent it for $800, and you got positive cash flow out of the gate, and you've got somebody in there who is there because that's their monthly amount, and you get long-term tenants. It's actually not a bad, and that's in some of what would be considered the less desirable places, right? So I buy something by a lake where I live right now, I can Airbnb that and get a bunch of awesome tenants and, you know, like tourist dollars coming in, you make more per month. But then also in some of the places that would be considered less desirable from a long-term appreciation standpoint, your monthly positive cash flow could be quite nice on those.
Absolutely.
It's real estate.
Then you can take that and put it in the stock market, right, John?
So my strategy.
You got to diversify. After you make your millions in real estate, call me up and I'll help you manage your stock portfolio.
It's the coffee empire, man. It's the coffee empire.
Hey, for younger folks out there, though, seriously, when they offer the first-time home buyers zero down bullshit, take their money. If you have an actual paycheck from a job, and they will qualify you. So you go to the nicest area, then you look closest to that. What is the shittiest house you can find? Like literally. I bought the cheapest house in 2 different cities the year that I bought the houses that I bought them in those cities because it was the shittiest house in the nicest place. I literally made myself like $100,000 in equity the first effing day by cleaning the place up, maybe 3 days. But if you're going to get a first time buyer thing one time in your life, so buy the biggest thing you can bite off, put your 4 buddies in there, do the work, clean the place up, and flip that thing. It almost can't not work because you didn't put anything down, and they're giving you ridiculous interest rates right now. There's nothing to lose. You have to live somewhere anyway. If you get used to living in the place that's also making you money, it's ridiculous. So
right.
I kept
And that's
doing
the whole concept of the homesteading, right? You're living on your homestead because you're not only living there, but it's somehow providing
your
you
assets to make you money.
Yep. Yeah, absolutely. And right now, real estate, it's obviously exploded in the last couple of years. Everybody's wondering, is it a bubble? Is it a bubble? Well, it may be. I don't know. But something to think about is, although real estate has just gone crazy in the last couple of years, it hasn't gone very far since 2006, right? If you look at a lot of housing prices in 2006 and compare them to now, it's not as drastic as if you look at prices from 2010 till now. So there's been a lot of years when there wasn't growth in real estate. But again, the demographics, we have millennials, and another reason I'm very optimistic about the near-term future is that these millennials are as big or bigger than the cohort of boomers, and the boomers are dying every day. So the millennials are coming through. They're I don't know, twice as big as the Gen Xers. They need housing. They're starting to form families. They're having kids. That's the 1960s post World War II type growth that we got, because we had all the baby boomers getting married, having kids, buying bigger houses, and we're seeing those millennials do that now. So I think real estate prices can hold for a while.
And the super secret sauce on real estate, once you get in, is it's not earned income. It's not subject to self-employment taxes. You can depreciate the asset and suck away your income.
And again, once you get into, you're getting that. If you buy an RV, it's probably going to be a depreciating asset over time. If you buy real estate, it's, other than during recessions, it's going to continue to grow. And you're in, like right now, real estate is crazy in Utah, but my house is crazy too, right? My house is worth a lot more than I ever paid for it. So yeah, it would cost me more to go somewhere else, but I've still made so much money from being in the house where I'm at, because I've got all that appreciation over the years where I didn't have to pay capital gains on it. I didn't have to pay the payroll taxes. I'm a huge believer in real estate, especially when it's owning your own home. Everybody own their own home.
Paired with your own company, it lets you do a lot of different things.
Absolutely.
John, with the changes that are being bantied around about how, evil rich people make money on their assets and we should have a net worth tax and all of that, how does that impact real estate? Or do you think that's just a huge distraction to keep us from noticing what they're really doing?
Yeah, well, that was one of the big things last year too that we didn't talk about. I talked about, things like Biden getting rid of oil companies and stuff. I mean, there was a big fear last year that he was going to have this big millionaire tax, or they're going to raise the capital gains tax, and none of that's happened, right? And none of it's even on the plans to be happening right now. I see a fog blowing through.
There's a fog in the screen, exactly.
I became enlightened here.
My place was not on fire.
So I'm not much worried about that, especially as it impacts the middle class. Again, could rates go up? Sure, right? And I'm happier paying 15% capital gains than I am 20%, but I'd rather have 80% of something than 100% of nothing. I look at taxes as extortion money. I'm paying the mafia their protection money, and I do everything legally I can to not pay them, but they're a reality, and I just price them into my business and my lifestyle. We may see more of a
interest rate prediction there. Did you say going up?
Yeah, let me get that in a second. So in terms of the millionaire stuff, the big billionaire taxes, we may eventually see more and more taxes there, because, again, something I talked about in my book years ago, we're going to get a UBI. I called it in my book, I called it more of a guaranteed basic income, because I'm more of a guaranteed believer than a universal. It's a little bit of semantics. But as technology grows and expands, and as it becomes more and more part of our life, people are going to lose jobs, right? The yellow page salesman guy, he's going to lose his job. If he's 55 years old, he's not going to retrain and start making drones because he just can't, right? So we're going to have to support those people. And, nothing has changed the economy more than the smartphone, right? I think of every industry and product that this thing has put out of business. And that's the way technology is. So that means that we keep getting this disparity in income and inequality, not because rich people are mean or because capitalism's evil or whatever. It's just that Microsoft, or who's a better example, may say Apple. Apple is a $3 trillion company, and they do it with this many employees, right?
Yeah.
General Motors was a couple $1 billion company years ago, and they had this many employees. They had a lot more employees to make a lot less money. And so you're going to get concentration in wealth because that's the way technology is. It makes the smartest people have the most money. And so I do think taxes will go up. We're going to have a UBI or some form of that. We're going to have to share the wealth. I don't think it'll be as bad as China's common prosperity, right? But it's not going to be as freewheeling it was in the past. And again, so what? People, I don't care. I'm going to pay my taxes and I'm going to make as much money and have as much freedom as I possibly can because I can't do anything about those other things. As far as interest rates, I think they're probably going to go up, but I mean, shoot, they're the lowest they've been in forever, right? August
trying, right? And then they back up,
and
every time they get close to even talking about it, calamity.
Right. We in the last, I don't know, I can't do the math in my head, but I'm gonna just say 15 years. It probably isn't that long. Maybe the last 13 years. We can't get above 3%. They try and raise the 10-year treasury to 3.25. The stock market falls apart. The economy slows down and things come down. And will they raise rates from the 1.5 that the 10-year treasury is today? Sure. I think they will. I don't think I doubt very seriously we're going back to 1970s, 1980s type double-digit interest rates. We couldn't support a 6 or 7 or 8% now, let alone, maybe we might be able to support a 3 or 4 10-year treasury, but they're not going to raise rates substantially. And that's part of deflation. That's another deflationary problem that it's the two sides of a coin. We are so prosperous as a society that we have so much reserve capital that the price of capital is cheap, right? Is it the Federal Reserve? Yes. But that's not the only reason. It's what it is, right? The Federal Reserve, the presidents, politicians, they do things at the margin, right? But they can't totally enact any one thing because it's just a trend. Money is cheap because there's so much of it. My grandfather, that was an Italian immigrant, he didn't own a stock in his life. He had some money that he saved up and he lived off his railroad pension, but he didn't have the assets and the resources I have, right? I mean, so money was more expensive to borrow because there was less of it, right? The people just had less wealth. Sure, the Federal Reserve printed less, but also there was just less money in the system. So I have all this money and I can't loan it to you at 9% because you're like, well, I can borrow it for 2%. Why would I loan it from you? So it's just a reality of the situation we're in.
So the big trend is people are really expensive. Money's really cheap. So maybe that's the bigger trend for the year is who's doing a better job divesting themselves of humans in their structure.
That one of the things I fundamentally look at when I'm looking at the stock is how many employees do they have and what's their efficiency, right? How much money and profits, sales can they make per employee? That's one of the biggest indicators of future success. And again, why I'm upbeat on the economy, because companies reduce that. If you go back 2 years ago, and I say it with a smile on my face because I always get the hate mail that, I hate old people or
I is old.
I am old, right? It's just that if you get rid of older, higher priced workers, you're paying a guy that's 55 years old, you're paying him more than a kid that's 25.
Yeah.
And the older guy may know more and more experience and all that wisdom. That's fine, but you're still paying him more. And when we came into this COVID problem, just like in any recession before it, you cut employment. And so when we were getting rid of all these employees and things were bad during COVID, I'm saying this is the best thing that could happen to the economy. Not that I hate old people and I want them to die, but it just is, right? And if you look at where the market was in December of 2019 versus it is today, it's up 45, 47%. A lot of that is because companies that have survived, now the ones that went bankrupt was bad for them, but the ones that have survived are stronger, more efficient. We're running this economy now, which is as big as it was in 2019. We're running it with about 3 million less employees. And of the 3 million less, a lot of those were ages 50 and older, which were higher priced employees. So, when they say, well, we have all this wage inflation, the average price has gone up, but not necessarily like the median price. And so, you got rid of the 55-year-old at 120,000, but you hired some 25-year-old at 80,000. He's making a lot more than he would have made a couple of years ago at 80,000, but he's still, the company's paying the younger guy, 40,000 less than they were paying the old guy. And those old guys are again, they're the ones that got screwed. If you're 55 years old and you got laid off, the chances of you getting as good of a job as you had before are pretty slim to none. But if you're 25, if you're 30, if you have skills, if you have ability to travel and change and grow and develop, then I'm just seeing young people now getting job offers that blow me away. I mean, inexperience and lack of skills doesn't matter. They're hiring people because they need them and they're paying them good money.
So I have a pseudo question from Telegram. Is there going to be a session at LFTN 22 workshop on telling the future?
I will. I probably won't pack my crystal ball because I don't want TSA to take it from me. It could be a weapon, we will have a future predicting the future thing. Now that you bring it up, and for both of you actually, because I'm going to be at Nicole's event and I'm going to be at Brian's event.
Awesome.
Move to better weather.
And I'm going to use the same title for both of them, even though the talks may be completely different. We'll see. But yeah, I am going to be talking about how to quit and grow rich. If you think of the old Napoleon Hill, Think and Grow Rich, I want to talk about quitting and growing rich.
That sounds perfect.
That is awesome.
Let's move to. You just moved the date?
Yes, I moved it to
he cut out.
May 20th to 22nd. It's in the warmer time of the year when we decided to not sell big tickets and make it way less stressful on me.
So it's not in April, it's in May? It's in May?
Moved to May.
Right, mine's in April.
Okay. Yeah, yours is in April, right?
I might be able to make squats.
So now we can make a circuit out of it.
Sounds good.
It's going to be awesome.
We need something in between that we can caravan to.
Oh, yeah. Floats. The Manifest is in Olalla down in Portland. They're in like June. And then the guy that does Agorist Marketplace is his festival, I think in Missouri, I think is called Mid-State Fest or something like that. Who's the gal that was at Jack's that started the calendar of festivals?
Haley.
Can you remember what that thing's called? I had it around here. Oh, it's on my water bottle. I will put it up in the comments on YouTube after the broadcast. It's she is tracking down all the freedom festivals in the U.S. and putting them on one spot on one calendar.
I can get the calendar up. I'll just pull it up. Hold on.
Oh yeah, okay, good. Oh, I forget
you guys keep talking. I'm now not paying attention while I look this up.
Okay, so quick announcement. So Squatch got moved. It was in April. It was going to be fun. But the biggest feedback loop that I heard from a lot of people was they were worried about how cold and wet they were going to have to be in April in Washington. And I just don't think of it because I just bring a hammock and go sleep out my trees. So listening to the older folks that want to come, we're moving it to April, or we're moving it to May 20th to 22nd. But the other thing for the older folks, It's on the water. There's Airbnbs that have Olympic mountain views and hot tub jacuzzis. You don't have to run around the field all night with crazy kids. So you
Much
can come
as I like camping, I love staying in Airbnbs when I'm way out of town. Washington State, where it still can rain any time of year.
Getting able to take a warm shower and make yourself a real meal and whatever. So yeah, if I was going to be on vacation and it wasn't my festival, I would now put that in the option category.
Free range.
You guys know me. I'm a party animal, so I will be in the midst of the mosh pit at 3-4 in the morning.
Yeah,
that's where I'll be. You know that.
John's last words to me at the last event we were at was, "Nicole, you look really tired."
You were doing
really tired.
You were working 20 hours a day though. That coffee service was fantastic. Never ran out. We were. Yeah.
Free range events is where Haley has just an amalgam of different freedom events. And if you have a freedom event, you should totally tell her, because I think she's looking to add more there.
So if you know of a freedom festival or camp out or all that stuff.
Johnny, bringing the camper to Squatch?
I'm definitely gonna squatch it in the camper. I'm not sure. I really like your the cabins out at your place.
Yeah.
So I'll probably do that again, but I don't know. Maybe I'll even camp on site at your place. Who knows?
It's up to you.
So I've been following the guys from the Domestead with their Foamcrete project a lot. I've been following Foamcrete for like 10 years. It's always really finicky. And if you notice his engineeringness is like every post is like 800 lines long of exactly like environmental. It's so finicky. So past it is this stuff called Styrocrete. Foamcrete uses the liquid soap to make air bubbles to float the whatever. So the problem is different density and blah, blah, all that, all the time, finicky. What if you just shredded up white styrofoam that you can get everywhere for free with like inverted lawnmower, and you mix it in a mixing tub 1 to 5 with just regular concrete, not fancy shit, just the cheap Home Depot shit. Then you pour it into blocks or forms or whatever. You don't have to worry about the bubbles compressing or going away. The styrofoam holds them there. So the blocks form immediately and it's real concrete. If you think about what that structure looks like, it's like a mycelium net. Like when you pick up soil that's been microbed, it's really dry, it's super, super hard. And so anyway, that's what I'm going forward with. We were going to do the Smurf huts out of the other stuff. Now that I have found the Styrocrete, and it was super interesting. Everybody said that was working on different projects that didn't talk to each other, that when they went inside the structures made of it, the sonicness was everything stopped. You're talking like 8-inch thick walls of styrofoam and concrete lattice. There's no direct path through. So it's going to be an experiment. And now I can build in any shape I want because you can cut it with putty knives, chainsaws, regular, whatever. So we can build goofy ass shapes. So when you come out, hopefully you're going to see some stuff.
You're going to see some stuff at Squatch Fest.
Yes. How do you get to Squatch Fest? There's no tickets anymore. So all you have to do is be a real live human and not a Russian fucking troll bot and talk to me. That's it. You will get invited.
Okay, here's a question from YouTube. K-Bonk says, thoughts on dividend stocks moving forward?
Yeah, I like dividend stocks for a little bit less of, not necessarily the same reason most people talk about. Dividend stocks, in a way, it's kind of circular reasoning that the people like them, because if you own Apple and receive a dividend, or you own Google and don't receive a dividend, but Google just plows the money back into the business and grows the stock more, it really doesn't matter, right? Getting the dividend is just them basically paying you to take some of the stock out early. So from that aspect, I don't care about it. But I love dividend stocks because generally they tend to be older, more stodgy, established companies. So they have a history of good management that knows how to manage its cash flow. And so that's usually means they have a good business model. And then the other side of it is that during a downturn, it doesn't matter so much on an upturn, but on a downturn, wealthy people, particularly wealthy retired people, tend to own more dividend-paying stocks because the dividend doesn't go down when the price goes down. It's a fixed dollar dividend, not a percent dividend. So if you own ExxonMobil and the price gets cut in half during COVID, you were getting a 4% dividend. Now you're getting an 8% dividend because ExxonMobil's still paying $1 a share one way or the other. So people that need the income can rely on that steady income stream from the dividend. So the dividend paying stocks tend to not go down as much during a decreasing market. I mean, that's really the biggest reason I like them. And yeah, I love them. I've owned IBM and Verizon for years for no other reason than they pay a dividend. I mean, they haven't been great performers, but they pay a consistent dividend. And that's kind of my, people ask about.
So are they less immune to drops because people don't freak out as much?
Exactly. Yeah.
Because they don't care what the underlying basis is because they only really care about wealth.
Yeah. You know how Jack will talk about generational wealth with Bitcoin and buying your Bitcoin, never selling it as it appreciates, you borrow against it. Then when you die, your assets get inherited at whatever that basis rate is. The cost basis when you die is when your heirs inherit it, right? So it's the same thing with stocks. If today you buy the S&P 500 for $4,700 a share, and 30 years from now when you die, if it's at $200,000 a share, your heirs, at the way the current laws are written, if you've never sold that, your heirs will inherit it at that higher cost basis. So there will be no taxes paid, right? There's no capital gains tax once you die. And so what wealthy people will do, they'll own these appreciating assets and they'll just live off the dividends. They don't borrow against the dividend. They just live off of it. So if you own all these dividend paying stocks, when the market crashes, Warren Buffett does not sell his stocks when the market crashes, right? He's got billions of dollars in assets. He's going to live the same life whether the market's up or down. So that's one reason why dividend paying stocks tend to be more stable, right? They're not, again, if you go look at the Dow Jones Industrial Average during the dot-com bubble, how much it collapsed. Maybe, I don't know, 30, 40%, where the NASDAQ went down 80%, right? So it isn't that you're immune to downtrends. It's just they're going to be a lot less.
Absorb some of the blow. But that's a great way to think of it because the younger kids that really aren't in the market, but think about Bitcoin and DeFi, and they can get that. John just explained it perfectly.
Well, taking that mentality that John has into cryptocurrency makes a lot of sense. We were talking about that before we started the show today. It's, buying the dip advice is great advice, but also just when you get into the crypto world, it's like learning how to do stock trading.
Yeah, it's building wealth is all about investing in appreciating assets. Mm-hmm. Right? It doesn't matter if that asset is real estate or crypto or a stodgy old Dow Jones Industrial stock, or if it's you investing in your education, right? Getting a college degree or learning a trade or a skill. You're investing in an asset that's going to become valuable over time, and that's the key, right? There's no secret. The Richest Man in Babylon, if you just read that book, it's all about owning appreciating assets. And
multiple times read it. Keep reading it. That's the thing about that book.
If you're just getting out of school and you're single and you've been used to living in a bedroom in your parents' house, go buy any piece of land and the cheapest tiny house from Amazon. It's a start. You're in. You are now in the real estate game. You're one of the rich bastards. It's only up from there. When you're young and can eat ramen noodles, go buy assets.
And that's what they don't teach you in school or teach you anywhere, because the world is based on consumption and debt. And so they want you to buy consumer products that are disposable, that you're constantly having to buy again. And I want you buying them too, because I own those stocks that's making all that money. So I'm fine with that. But if you're a contrarian and you don't live that way, and you get out of college or high school or whatever, and you start your trade or your skill, as you increase your income, you don't increase your capacity and the way you live. You do go up as you go along, but not as much as income you make. You make more income and raise your standard of living lower and lower. And then that way you not only save and have money to invest, but when you're old like me and you have a lot of money, well, I still live like I did when I didn't have a whole lot of money, right? So I have even more money. I picture on the wall, I've got 6 adult kids. My kids are all grown now. I started investing in 1985. My wife and I got married 2 years after that. We went on to have 6 kids. We were a one-income family. And, we always had, of my peer group and of the people that I worked with or made the similar incomes, we always had the least expensive house, drove the least expensive car, took the least expensive vacations. And because we were a one-income family, we were dedicated to, raising all those kids. And that was a lifestyle choice that we made. We had to lower our living costs to do that. But as I invested and made more money, things got better and we had more money to spend. But I've always still lived that conservative lifestyle where I guess I was going to say this before about emergency fund. That's made me think I lost track of emergency fund. So my emergency fund now doesn't matter because I just have all this money because I live the same way I lived years ago when I didn't have the money. And that's what I was going to say about dividend paying stocks. I own some dogs in terms of dividend paying stocks, Verizon and IBM over the years. That's my emergency fund, right? Rather than put my emergency fund in a bank where I'm not going to make any interest, I own Verizon and IBM and some other kind of crappy stocks like that. They're old, they're established, they're not going out of business, they pay a dividend, and they'll generally keep up with inflation. If I need to buy a new car or do something, I'll just go sell some Verizon. I'm not looking at those for big growth. I'm just looking at those for stability. And I'm not going to make any money in a checking or a savings account. So I'd rather put it in, a small percentage of my money that's in the emergency fund. I put that in the dividend paying stocks. Okay,
gold at this point, it hasn't gone up. It's the same price it was 10 years ago. They're printing dollars like crazy.
Lower than it was 10 years ago.
What do you think?
And this is one of my arguments against Bitcoin. And again, not that I don't have a conviction on Bitcoin one way or the other, right? I can see Bitcoin or cryptocurrency going to 1 million. I can see it going to 0. I mean, it depends on, because I can't predict the future, right? I don't think it's going to 0. Right? I don't think it's going to 0, but I may not get the 1 million either. Right? It's going to do what it's going to do. But one of the arguments I have against Bitcoin, where everybody says, well, it's digital gold. Well, so what? I really don't. I've never owned gold. There's only gold I've ever owned. I might have traded a gold ETF from now and then, but long term, I've never owned gold. And it's not that it's a bad investment. Jack Spirko talks about gold being an assurity, right? It's not an insurance policy. It's an assurance policy. It's something that's going to hold its value. It's never going to go to 0. It's going to grow with inflation. That's all fine, and that's great. I personally have never really cared about precious metals or silver or gold or anything because they don't do much better than that. I mean, there are 5-year periods of time that during a crisis, it makes a good trade where you can ride it up from about 2003 to 2011. It was a phenomenal trade, right? It was a great trade, but it's been horrible ever since. It's a nominal price today, lower than it was in 2011. On an inflation-adjusted price, it's lower today than it was if you bought it at the peak in 1979. I mean, that's how. So it's go look at the price of gold in 1980 and look at the S&P 500. Look at those two prices and compare them today.
It doesn't work because it can't do better than the print.
It can't do better. It can't do better. So yeah, if and my other argument, again, it's not that I hate it. It's not that I think it's a bad investment. There's worse things you could buy, but it isn't going to make you rich. And even if we hit the zombie apocalypse, I would much rather own, Marlboros, alcohol and ammunition than owning gold. I can't eat gold. I can. Bureau of Alcohol.
I would have paid for antibiotics yesterday. It was a lot.
Yeah. The things you're going to need in a real meltdown crisis are not going to be gold and silver. They're going to be alcohol, tobacco, and firearms. That's what you need. And I don't think we're going to hit a zombie apocalypse anyways. But so anyway, that's my argument against gold.
Okay, that brought me to my next question. When people figure out all this bullshit is kind of bullshit, it's kind of the narrative's devolving. Do you see any kind of blowback that is going to impact the market?
You froze up a little bit, so I missed the first part of that. I got the blowback on the market, but which BS are you talking about?
Just all the whole COVID narrative is just breaking down all over. People are if it comes out that statistically people getting the thingy are just dying at a much higher rate than normal, and there starts to be actual like, hey, you're killing people. I foresee that could go really sideways.
Yeah, so you're saying if the vaccine has a negative impact, is that your point?
Right. Well, the narrative seems to be breaking down already, right? You can't hide from you can't hide from the numbers. You can't hide the dead bodies. You can't hide the statistical analysis. They're trying to not let docs out, so it can't be talked about. But the truth will always come out. Will people be so pissed off that some crazy stuff goes down this year, which could be, then the safe thing to do might be head for the hills and go conservative.
Yeah. So I don't know. I don't pay attention to all the. I'm not a vax guy or an anti-vax guy, or I kind of ignore it all. I will say this: if we think
there's a higher probability right now of craziness.
If we do go into any kind of a crisis, it's always better to just go into U.S. dollars. Go back and look in March 23rd, 2020, when the S&P 500 dropped 30%. Everything dropped. Bitcoin dropped, gold dropped, silver dropped, everything dropped. And the downside is something
it drops, right? And
when everything drops, and that's actually the disadvantage to the Bitcoin. Again, as it becomes more institutionalized and more stable, it just becomes more synchronous with the market. So if you get a margin call because your Apple stock is down, you've got to sell your Bitcoin to cover it. So that's why everything kind of goes down. In a crisis, the U.S. dollar always holds its value just because, it's a fake value, but it's still a value. It's just what it is, right? People have faith in it. The nuclear arsenal and the naval superiority of the United States keeps it what it is. And so if we do hit a crisis, it's always better to go into U.S. dollars. Sell your stocks, sell whatever, go into dollars, wait for the dust to settle, then go in and buy the assets that are down. And if we have a revolution and there's zombie apocalypse or something and the dollar goes bankrupt, well, I just feel I got more problems to worry about then than anything else. As far as the back blow on the I'm not going to comment on the virus, on the vaccine stuff, because I have no idea. But here's what I will say. Look, the narrative has totally fallen apart in terms of what this week the CDC cut the isolation thing down to 5 days, right? It was 10. Now, if you get infected, 5 days, right? So now it's 5 instead of 10. New York City's newest initiative, with both the outgoing mayor and the incoming mayor, they both agreed on it. Their new slogan is "Stay safe and stay open." Right? There's not the shutdowns. I don't know. Are they still going to make you wear 3 masks or something? I don't know.
The chickens,
but I think a lot of the narrative is just
coming home to roost. Can't hide from economic reality.
Yeah, and it's also, and again, it's not that I deny full disclosure. I am vaxxed. I'm actually vaccinated. I did my own research, looked at things. I decided to get the vaccine. So I'm not anti-vax, and I'm not anti that it doesn't. The virus doesn't exist.
It doesn't even matter. I'm just talking about for the market and the people pissed. And
right, yeah, but I mean, kind of even with all that, I look at this and it's just all BS anyways, because it's a virus. I mean, a mask isn't going to stop it. Social distancing of 6 feet isn't going to stop it. If you put everybody on an airplane breathing the same air, and they're all scrunched in there like sardines, what difference does it matter if they're wearing a mask for an hour?
I don't even pay attention to virus or no virus or any of that. It's a media hoax that has been deliberately perpetrated on an entire country and people on the inside.
Entire globe. It's a global thing.
Yeah, it's kind of crazy.
And Brian,
at some point when the pitchforks come out, some people are going to want to stay alive, so they're going to give all the data up. So,
but Brian, you and I are old enough. The millennials don't know, but you and I are old enough to know. Yeah, the millennials like Nicole. There's young kids. they don't know, but old guys like you and I.
You're reversing my age. I appreciate that, John.
think about the Cold War or the war on drugs. Or when any other myth that
like weed's great for you, they get pissed and they want to hunt heads.
The government, the oligarchs, they're always going to have some kind of power struggle. And we were lied to about the nuclear strength and capacity of the Soviet Union for 70 years
on purpose to support the war
on purpose, right? It's the way it is. There's always there's always a crisis for them to perpetrate. And so I don't think things are going to fall apart because I don't think things fall apart because the oligarchs they'll come up with another crisis.
Okay. Wow, that's even worse.
We've been living crisis to crisis since I started noticing that we're living crisis to crisis. Yeah. And I bet it went on for decades before I noticed.
I've survived the ozone hole in the atmosphere, and I forget. There was a chemical on apples. Was it Alar or I forget even what it was? Right, that and Oprah said that meat was going to kill you. I mean, it's my Italian grandfather used to say "bullshit." That's what people say. People say the news and stuff is all propaganda. I literally, as a little kid in the 1960s, I remember my grandfather watching Walter Cronkite and swearing at the TV saying, "bullshit."
That's a good perspective right there. Because really, if you don't consume it, it just doesn't exist.
Focus on your strengths in your community and how you can make money, owning appreciating assets, and it's going to be different for every different people. You're in Washington, she's in Tennessee, I'm in Utah. We all have different lifestyles. We have different things we're good or bad at, but we make things work in the world that we want to live in, and it works.
It does work.
It does work. Somebody said, John, the financial Prozac. Yes. Thank you.
That's why I'm drinking iced herbal tea, peppermint tea, because I am stone cold sober. That's that's my Prozac.
Okay, what do you think about commodities next year? Well, you gave me some advice for the coffee market, which I took, and I think I'm winning on that already by just calming down and not freaking out, because it hit some all-time highs. Nicole and I being in the market.
I just had to buy a pallet, and I feel it right here.
Yeah, it's funny, right? Because looking at commodities on paper and trading them is different than being a manufacturer that has to get pallets in the door of the thing. So you guys are mucking in the market, playing the game, and we're worried about buying actual bean deliveries. Right.
But and in your got both of your cases though, that is a reason to look possibly at the futures market. For the same reason the big guys do, right? It isn't that you're gambling at that point. You're just saying that I need coffee. You need to buy coffee for your business, and if you invest in buying, some kind of a put to protect yourself if coffee prices go up, or a call in that case if coffee prices go up, then you're not really losing or winning either way. That premium you're paying is you add into the cost of your business that, that just becomes the price that you're paying for your coffee. And that way you're protecting yourself in case coffee prices skyrocket. I think overall, we're living in a world, like we talked about, there generally is a lot of deflationary pressures. And I think that overall, we're not going to see the hyperinflation. Commodity prices may not come crashing down. Like, I don't think we're going to see, oil at $20 a barrel next year. But it's probably not going to stay above $100 either, right? I mean, it's going to be directionally more than it was 10 years ago, but not necessarily going up much from now. And it's like the lumber prices were really twice this year. We saw two big peaks in lumber prices this year. Timber prices never really went up, right? So there was never a shortage of wood. There was just a gap of the finished product because of supply chain issues and short-term demand and things like that. So, things like coffee, copper, they've all gone up a lot. And again, I don't think they're coming drastically down, because as we do move to more of a high-tech economy, we need more copper. We need more lithium. We need more platinum. But at the same time, technology sources that stuff and makes it cheaper, right? So coffee growers will grow more coffee. Copper miners will dig up more copper, and it all kind of balances itself out
together like taffy, right? And if you can just calm down, because you're in the system, you're seeing the stretch, right? So yeah, the advice to just take a breath.
Take a breath, see what it goes. Like things like oil price. I'm not selling my oil stocks probably till summer, because I think, there's still a shutdown. We've not gone back to, especially things like international travel. I mean, that's a huge consumer of jet fuel. And so I think, I don't know that oil is going to $120 a barrel, but I also don't think it's going to 30. So I'm going to probably ride out my oil stocks till sometime in the summer and see it goes. There's huge opportunities in the reopening trade still. I mean, things like commodities are fine to invest in, but I look at things like Lyft. We talked about employee-based companies and things. Look at a company like Lyft, where, rather than investing in an airline that has all these employees and stuff, you can invest in a company like Uber or Lyft, and I personally like Lyft better in terms of the stock. Lyft is an app, right? They've got a couple of development engineers, right? It doesn't matter. There's all kinds of people driving cars, but they're not employees of the company. So Lyft is basically an app. And if things do reopen more and people start traveling more in urban centers and renting or using more rideshare things, then the price of Lyft stock goes up, and I think it will. I mean, I've made money on Lyft year to date, and I'm not selling it. I think it still has a long way to go. There's a lot of those in-person service type companies that I think are still great buys.
And people have gotten an appetite for getting things delivered to their homes. They're starting to see that it's not necessarily a bad use of money to pay a delivery fee if they don't spend their time out on the things that you can put into a delivery fee. And that's something that was accelerated with all the pandemic shutdown stuff. Right.
Absolutely. Yeah. That
we learned from that trend.
The pandemic just made things that were happening anyways happen sooner, right? I mean, the things like teledoc and more ordering online, that was all happening anyways, but the pandemic made it happen sooner. It does make the economy more efficient. That's why I'm happy to think that we're going to continue to get the growth. Even a company like Amazon. Amazon's had a bad year. As we've talked about these things, it all gets back to the value. Gold is a good investment if you bought it at $1,000 a few years back, but it's not a good investment if you bought it at $1,900 in 2011. So it's a time factor. When did you buy it? Things get overpriced, underpriced. Amazon has been a dog all year. Amazon has not grown, but it's just because it grew so much in 2020. Amazon skyrocketed because all the stay-at-home drove people into buying the stock. Amazon is probably a good buy right now because it got priced back into where it was at. Where I come with that whole thing, though, is, I saw the statistic the other day. Online purchases, retail purchases are still something like, 27% of overall retail is online.
Mhm.
So, I mean, it's still in its infancy. If you,
Yeah, we got a ways to go.
we got a long way to go. I mean, it's not that online delivery, that in-person service thing. It's all going to happen more
out here. Amazon's opening up the new grocery stores. Actually, the one in my town, because the 4 other grocery stores have closed because of the not intercepting thieves under $1,000. So literally, all the Tide, all the anything worth any, the shopping carts going out, right? So all like Albertsons is gone, Fred Meyer's is gone. So that I figured it out the other day. Amazon's about ready to open in where the Sears is, right? A giant one. No humans go inside the building. You're going to pull up and they're going to hand you your groceries. If you can't get inside the building, you can't shoplift. Period.
Right.
Their number one cost, well, employee theft, but their number one cost of running the store and human employees, right? Because shit, I mean, once there's no humans getting in the way in the aisles, the robots can pick faster.
Mhm.
Right.
Yeah, living in Tech Central, I get to watch it happen. But that is the answer. And the other interesting development, Gig Harbor, because of the theft laws now of literally going in Home Depot and you want a $998 generator, go grab one. So they're literally calling the police all day long, every day now. So there's 3, like as soon as one cop car pulls out, the next one pulls in. So the city of Gig Harbor is saying, you, big business, are imposing your actual running of your business onto us as being your security personnel for your store. Like, we can't do that. So they're going to pass it. They're writing a new law for the city that basically puts the thing back on the businesses as to, you need to run your business in a way that you don't need to be calling the police. When you call us, it will be a fine against you. So right now, private security, that we will now see what percentage of Home Depot's business all the mom and pops have been paying in their property taxes forever.
Exactly.
Because the cost of running the store properly to not have your stuff stolen all day long is now going to be laid bare.
Right. Absolutely.
It's the cost of government. This is the cost of farming government services to independent companies. It's going to be super interesting. But so anyway, the West Coast leads the crazy wave of shit that comes back at you guys. That's coming.
Yep. Hey, you make me think of two. You make me think of 2 things with that. One thing, Amazon, as good as the retail sales is, that's not even really their strength, right? The growth potential of Amazon is in AWS, Amazon Web Services. So that's really
that's
where
why
they can go.
Yeah, that's
right. And when you think about how they integrate in with that, not only that, the computing power, but also the advertising component of it, and they haven't really implemented blockchain yet either. Wait till that happens. I think Amazon has huge potential. You mentioned the security aspect, though. 2 things that kind of make me happy about that is I own Brinks. Remember the old Brinks armored cars? Yeah. I own that stock because I think that a lot of people said, well, we deal less in cash, so we need less Brinks armored cars. Yeah, that's true. But that also means that all the little regional guys have gone out of business and Brinks is kind of the only guy left. And then also, what about all the money that's in artwork or jewelry, right? All these other things. I mean, crimes are just so rampant now that I think Brinks is going to have some growth potential there from the security aspect.
Security as a sector. All the
as a sector, yeah. All sides. Cyber security, physical security, all the security. It also makes me happy from the freedom standpoint of it too, that it just shows the poor nature government. I mean, you pay all this stuff in property taxes, you're still not getting the police support. I know there's
security. They just said that it's
right. There was never any security there, right? And so that's good, and that makes people accept more responsibility from themselves, come up with better communities. as bad as people think, our rights and things get degraded, which they do, right? I mean, just look at how many people have either concealed carry permits or they live in right to carry states. And I meet women every day that are just packing these 380s and 9mm in their purses. And when I was a kid, I didn't know any woman that had a gun. I mean, women didn't own guns 40 years ago. Now they're all carrying heat.
The illusion of security is breaking down. It was always exactly the same. Just people can see things now. It's harder to hide information.
Yep. Yeah. So from a cybersecurity aspect, I mean, Palo Alto, Hacks ETF, all those things are great. I think great long-term investment things. They're only going to get more complicated, and they can't ever completely be automated because the criminal element always gets smarter, right? Because of human creativity, and then you got to have other humans create. It's spy versus spy. It's always going to be
as a sector. As government gets out of it more, the private industry will probably pick more of it up.
Get more into it, yeah. And from cybersecurity, cybersecurity all the way to tasers and non-lethal type weapons. I think it continues to grow.
Really cool.
The demographic side of it too. We do have a rising rate in crime also because again, there's more. The millennials have brought in more younger people. There was a big gap when crime went down because there weren't that many young Gen Xers, right? And if you have less young men with nothing to do, you have less crime, right? And then as we started getting more millennials, there's more crime.
Oh, millennials.
Well, the millennials just get beat up.
Yeah, it's
I love millennials.
The ones that are switched on are going to own the world because they're going to get the offers. They're going to go up so fast.
And they've been raised with the internet. I mean, it's just a different world. They have so many opportunities.
And that is why I started at Scramblin University. I've been in the trenches kicking teeth for 30 years. I can tell you how to build brands. I can tell you how to manufacture products. You can have access to my Rolodex of like 5,000 people that actually make shit in the US and all over South America. So ask me shit. Come see some YouTubiness. Ask me questions. The show will go where it goes. I'm on episode 2.
And that's again why I'm optimistic about the futures, because we have all this technology to interconnect things from drones to the internet to communication devices, global supply chains. And while some of that breaks down, it just the barriers to entry in almost any field have come down. Right, from what I do as a money manager, I couldn't have done 20 years ago. The way, right, this vast empire you see behind me, right? I manage $70 million right here. I need no technology. I don't need the Wall Street technology that I would have needed 20 years ago to do that.
And you didn't wait for permission to go do it.
And I didn't wait for permission to ask somebody to go do it. And that's the same in every industry. If you want to manufacture something, if you want to be coffee manufacturers like you guys are, there's just never been a better way to be able to research products, how to make them, how to get supply chains, how to use marketing to get new clients. It's all virtually free, and you just need to figure out how to apply it.
And since we talked about humans are the most expensive thing for businesses, if you're out there thinking about, I want to start a thing, or one of our buddies that we all know today, we started talking about a new industry we wanted to look at. And I said, Tell me, I need you to talk to somebody who just lost $1 million so you can get a reality check. But connecting, it's so easy online now. You got to know, like, just ask, but white label. Don't do the thing. If you think you're hot to trot in it, I want to make the next great, somebody's making it. Somebody invested in the plant and technology. They've already paid it off. They're going to make their stuff regardless if you exist or not. They can add you on as an extra widget on some downline time for very cheap. cheaper than you would probably be able to make the thing for your first year or two in existence anyway. So if you think you have an idea to make a thing, look for a private label way to make it and sell it.
Yeah, because you need to know if you can sell the thing.
The thing, yeah, anything. The selling it is the thing. So even if you sell it at your cost for a year to prove the model, and then you take that to a bank and I have the sales, the machine cost X, money. But people don't know white label exists or private label in the grocery store. All that crap on every shelf is made by the same people that makes all the other crap.
My dad is in commercial food, and I grew up at the peanut factory watching the brand go out the door, watching Mighty Fine go out the door, watching Costco go out the door. It was all from the same factory.
And private label jewelry or lighting or paint. I can't even think of it. But if you're thinking about getting into something and you're like, do I spend the money? Maybe. Keep your powder dry.
That gets into one of the myths that, the oligarchs perpetrate. The union oligarchs for generations have perpetrated the myth about, good manufacturing jobs, good high-paying manufacturing jobs. The money is all made the closer you are to the client, the customer, right? The closer your proximity is to the end user, that's where the money's made. That's why salesmen always make more than machine operators, even though they don't work as hard, right? It's the sales guy that makes the money because he's engaged with the client. And if you can get into selling a product that somebody, like you said, has already sunk the capital into producing, then your startup costs are next to nothing. And the value of your business is that service that you provide your customers. And that's where the money's made. Nike doesn't have any shoe factories, right? That was always a joke. When I was in the manufacturing business, I'd always ask people that, how many factories does Nike have, right? None. They don't make it. The money is made in designing and selling the shoes, not in manufacturing the shoes. And that's why in some ways the globalization that took a lot of the manufacturing out of the United States didn't hurt us as bad as it could have, because the real money was made in the services and in the customer side of it. But even with trends, that's coming back. That manufacturing, because of automation, if I was going to short anything long term, it would be China. China has made its wealth on producing low cost, flooding the market with low cost products, low wage labor. Robots work for free, right? I mean, once you have the capital expense paid, there's no incremental cost. You have very little incremental cost, and that's
why I got a 75-inch
that variable
HD
variable cost. That variable cost goes away, so labor becomes essentially free. You can manufacture that in not necessarily in the U.S. but North America. Between Canada and Mexico, there's plenty of land and plenty of raw materials and energy costs that a lot of those products are going to be made back here.
And now that shipping is getting to be an issue, they're going to have to calculate the percentage in now of being late on contracts and as a calculation. Yeah. So now the cost of making it here technically just got cheaper just because.
Security issues, all that. And it gets back again to the pandemic. The pandemic just took a trend that was already happening anyways and escalated it. And, speaking of the difference that it doesn't make in politicians, we talked about Trump or Biden. Biden has essentially the same trade policies with China that Trump had. It doesn't change. We're headed in a certain direction, one way or the other, that the goal is to get on that trend and figure out how to profit from it.
Yeah. Did we wrap it up? What do you guys think? Are we getting more questions? I can't do both at once.
I can't do both.
Yeah, I am. I'm not seeing more questions right now, so it might be time. I mean, we've gone about an hour and a half. It's about how long we usually go.
Yeah.
You want to go around the horn and do a pitch? Like, John, tell us about your podcast and what you do for a living.
Yep, my podcast is a wealth steading podcast over here. Like homesteading, it's wealth steading. I talk about that holistic lifestyle to build and preserve your wealth. Talk mostly about trading stocks, but I cover all aspects of it. I had an episode the other day on Morse code. So
Cool.
No telling what you're going to get if you listen to my podcast. My business is Investible Wealth. I'm a private money manager, independent, not associated or affiliated with anybody. My pitch there is that primarily I have discretionary trading authority where I invest for my clients the way I invest my own money. And, for people that have the same kind of long-term goals and outlooks that I do, I can manage their retirement money for them. And I'm very blessed. You can find me on social media or Google the podcast or whatever, but
Comes right up.
I get to do what I love to do every day. And that's why I kind of like to share it with other people, because again, this wasn't possible for me to do 20 or 30 years ago. It's the technology, and it's free for me to share the things I do because anybody can do them, and it doesn't cost me anything to tell people about it. So,
Cool.
come find me.
Awesome.
Oh, let's see. Foodforestfarms.com.
Foodforestfarms.com.
That's
And
it.
great. Yeah. I will say this. I do an event once a year. We were kind of talking about events earlier, the Living Free in Tennessee workshop. And mid-January, tickets go on sale. I only allow a total of about 80 people on my property. And last year, they sold out in half a day. So John's going to be talking. I don't know, Brian, are you coming?
Now I'm able to.
He might be able to now because he moved his event. So we've got some great speakers, and it's a really good way to have deep, ongoing conversations and fun with people who are looking to develop underground networks, looking to support each other. So keep your eye out for that at livingfreeintennessee.com.
And I'll put in a plug for that too. I don't know how many years I've gone to that now, but it's been several. And what I love about Nicole and that network of people is that, you're going to have guys like me there, which are money managers. You're going to have people like our friend Glenn that's, he's a New York lawyer, New York attorney. But at the same time, we may be butchering a pig, right? Or we may be...
Might be rabbits this year. But
rabbits, whatever. I mean, but there's just... the reason I like these kind of events is because so many different crazy things go on that, there's just so many skills developed. And if you're interested in them, you get to participate. If you don't want to do something else, you don't have to do it. It's a lot of eclectic type people doing weird and amazing things. And so I enjoy that networking with that Tennessee group of people.
Awesome.
All right. Oh.
Okay, and I see we missed a question. So, James, I'm going to see if John will give us an expert counsel segment on your question, but you need to email me at info@unloosethegoose.com, I think is our email.
We'll have you back on. How about that?
That's a great idea.
Honk, honk. Bye, guys.
Sounds great. Well, Happy New Year to everybody.
Happy New Year.
New Year.